Hey everyone, my name is Alex. I'm a real estate broker on the East Side, and today I have special guest Nina Johnson. She is our preferred lender, and we've been working since what?
Since 2.5 years now.
Yeah, 2.5 years. That's with me, but with my partner Rita. So you've been working for like decades, right?
Yeah, over 18 years.
Okay. Can you please introduce yourself to our guests and tell us who you are and how you became like such a good lender that you help like many agents and many homeowners to get their dreams and to become a reality or something like that?
Absolutely. So I've been in business since a long time. July 1997, and I worked for several companies, and right now I work for Movement Mortgage. They are impact lender, and I'll get a little bit more on what does it mean to be impact lender. Over the years, I helped over 6,000 families to acquire
Wow.
homes.
Wow.
And come to find their dream home and their starter home. Investors who buy properties for investment, for new construction, all type of properties, all type of families, and I'm very proud that I can bring value to our community here in Washington and Great Seattle area.
If I can ask you, so everyone has a reason why they pick up like a specific job or a specific field working on. How did it happen that you became a lender?
That's a great question, Alex. Thanks for asking. Very interesting that I found here in America, we have all kind of opportunity. It's a great country, and I'm very proud to be here. I'm very happy to be an American. However, mortgage is biggest debt people acquire, the longest for 30 years or so, and it's complicated. Lots of people get really confused. Even now, with all the information on YouTube, on Facebook, all the classes. So I felt like that would be great to bring knowledge to people out there, to explain what are the options, what are the possibilities, so people feel comfortable, since it's a tremendous debt and tremendous step in their life to get first house. So that's main reason, and I love what I'm doing. I'm so happy to help people and be there for them.
Nice, that's a very good explanation. And since you became a lender, I know you passed like 2008 crisis and all that stuff. Perhaps it was like more just because I'm in real estate, like for 3 years, but you've been like for 3 decades almost, right? Like 25 years or so. Can you tell us a little bit, like how it was like when you started as a lender to get a mortgage and how is today? And probably the next question is gonna be why today's loans are more safe than the previous loans, like 2005 for instance. But first, if you can tell us a little bit about like all these periods and how you passed them, and just explain people and they will understand better, like how it was before and how it's now.
Totally. So when I started in 1997, rates were slightly under 10%. 9.75 was the going rate for 30-year fixed. And people who used to live in this country previously, they were very happy with the rate. Actually, apparently in previous years, some rates were as high as over 20%, 18%. So when I would say 9.75, they're like, "Whoa, that's good rate." I was quite surprised. And so in 2008, in the mortgage crisis, there were many unsafe programs where people were just, literally you can stick your finger and get a loan.
Okay.
So, and the programs will not verify your income, not verify collateral value of the property. And after that, picture changed. So now it is not easy to get a loan. You have to have a solid employment. You have to have a down payment, not necessary. Some programs don't require that for first-time home buyers. However, the underwriting, the look into the package of the borrower and the property value as a collateral became very detailed, very safe, and nobody is expecting that to happen in the future as far as it happened in 2008.
Yeah, that's a pretty good explanation. So what I'm hearing for you, so basically like back then, like everyone could have get a loan, right? So it doesn't matter if you have an employment or not. So you basically go to the mortgage, lender or maybe like a branch, and you say, hey, I want to buy a home. And so they will just lend you money on that, right?
Exactly.
That's why probably they burned up whenever, like those loans, they got, I don't know, like called out or maturity or something like that. So, or maybe they had a balloon loan in 5 years, for instance, right? And when they had to refinance or maybe I don't know, they all have to pay out or something like that. So they just got like underwater just because the value of the property, because too many properties came on the market, value of the property was less and they couldn't refinance and they will have to come up with some money to refinance. That's why
Yes.
usually it happened all
That
that,
was
right?
another reason, because some of the programs which are no longer on the market were very dangerous programs. Why? Because they would give you an interest rate which was artificially low. However, the difference between the actual rate and that artificial interest rate was added to the principal balance of the loan. So
Oh,
within
okay.
a year, all of a sudden you borrowed 200,000, now you owe 300,000.
Oh, I see.
And the property's value start falling down, so nobody could refinance.
So basically, in today's mortgages, for instance, if I buy a house, so I pay off my principal. But back then, just because the interest was that high, so basically you're building the principal into the property, right?
You adding the interest,
adding.
interest into the property.
Yeah, I see.
Instead of building the principal, you're reducing your principal and adding what you owe to the bank.
To the bank,
more
okay.
and more and more and more.
Wow, that's
Yes.
crazy. Yeah, I didn't even think that it was something like that, because
Possible.
that's very dangerous, like
Quite
Yeah.
dangerous.
if you don't have appreciation on the market, so yeah, you're burned out, right? Because appreciation may rescue you from this. If appreciation is higher than that interest, so basically appreciation can cover whenever you sell the property. But if
Sure.
appreciation is less, that's from my understanding. Just correct me
That's
if I'm
correct.
wrong.
No, that's
So,
correct.
yeah.
That's
As you mentioned just a few moments ago, Moment Mortgage is an impact lender. Perhaps I say it wrong. Yeah.
that's correct.
It's correct.
Yes.
What that means, because I don't really know that. I know Moment Mortgage is a good lending company, but I don't know exactly what's impact lender.
That's a great question. So what does impact lender means? Impact lender means that we are doing the business, we are in business, but our goal, number one goal, is to help our communities. So for every loan we do, we take a portion of the loan proceeds and we invest in the communities we are. We're building schools, we're helping people who are in need to help. So, and the impact on the communities, that's what makes our business successful, because we are bringing value to the communities we are working, which is across the nation. And I'm very proud to be with a company who brings value to the communities and not only to their own pocket.
Right, yeah, this makes sense just because like in recent years I see like Moment Mortgage, they just grow up like very fast, and even like smaller brokers, I mean like brokers, lending brokers,
Yes.
they fall out, so they will just join Moment Mortgage just because they have all these opportunities.
We acquire
right?
so many in this year of the high interest rates. Right now, people are just losing the companies and lenders are closing their doors, but Movement Mortgage is here, and we are very, very ready to help everybody who needs help to acquire their home.
Okay, that's nice. Yeah, that's good to know if somebody wants to join, so they basically can,
Absolutely.
join the Movement Mortgage and they can become like a lender
Yes.
of Movement Mortgage. If I can ask another question, so if you would be like today starting your career, so what's gonna be your first step?
If I would be today starting my career, what would be my first step? With the knowledge I have or without the knowledge I have?
Let's say knowledge you have, because this is gonna be like a good advice for like people, like young professionals like me, because I don't have that knowledge, for instance, right? And when somebody with the knowledge can tell us exactly what you would do in that situation, so perhaps I can get like a better road, like building my future into that field.
Yes. So I think I will kind of do like a two-side answer.
Okay.
First side answer, I would say that here in this country, when you have all these opportunities to grow your business, especially in the mortgage finance industry and the real estate industry, the first step you could do is really it's a 101 playbook to become a millionaire.
Yep.
What do? You acquire first property for yourself as owner occupied. You live there. After 1 year, you can acquire next property. The first property becomes a rental property, and you continue on and on and on building this your empire. And then when you have the properties and you have knowledge and expertise how to buy properties, how to finance properties, how to manage properties, how to become homeowner, you become more valuable for your clients, because you're not only just saying, hey, do that, but I'm renting. No, you're saying, I have portfolio. I can tell you, I went through all the crises. I can show you how it was then, what is it now, what are prediction going forward. So that's very important to
Yep.
be part of the actual process. So
Yeah,
then,
not just the theory, learning theory in the school. So basically, if you learn the theory, so before you apply, you don't really have that experience and knowledge, right?
exactly,
Yeah.
exactly. And then what really surprised me, right now we have high interest rates. It's true.
Mm-hmm.
But it is kind of very strange how nobody talks about one thing. What is the one thing really good about having high interest rates? There is a one very strong thing which is excellent, which nobody talks online or anywhere. For every time interest rate goes by 1%, we have 3 million buyers eliminated from the market.
Okay.
And the number is even more because we have some buyers who can qualify, but they're afraid.
Yes.
So it's more than 3 million. So what makes buyers who are in the market want to buy now? They have options to go to the seller, and seller have to, at this market, be more considerable on their price points and bring incentives to the buyers, like give them credit to do buy downs, so rate and payment is more affordable, or work into the credit toward the closing costs. So the time is to buy now, not later when interest rates will go down and everybody will be fighting for one property.
Yeah, that what happened basically like 2 years ago, right?
Exactly.
It was like 2.53%, and everyone wanted to buy a house, even if those properties went up like $100,000 in some places, right? So
Exactly.
everyone wanted to buy those properties, and basically you had like a lot of buyers, not too much inventory. That's what
Yep.
created like high prices. And if you bought, then even like low interest rate, anyway, you have like higher payment, and then you have the principal higher if you want to sell it. So that's going to be another issue because you have like a higher principal amount in your mortgage, right?
Right.
So what you are saying right now, even if buying right now with higher interest rate, so you can get like pretty good price, like compared to what was before, or maybe what can be in the future if the rates drop
Exactly.
again, right?
Yeah. So basically, if you paid, when prices were on the top of the market and you were overbidding, so you had to overbid 50,000, 100,000, 150,000. Okay, you got a low interest rate and your payment, let's say, is $350 less a month. Now it's higher rates, but you can get much better price. So if you save 200,000 on a price point to acquire your real estate,
Yep.
then $350 a month times 12 months comes out to be, just couple thousand a year. Over a couple years, all the experts on the market are saying the rates are going to go down. We have a pre-election year coming up. So that's what we're looking at. So do not waste, do not sit on the sidelines, move and find your right house now.
And when you mentioned before, like to be in the field, I'll just go back a couple of moments. So I remember when I bought my first property, I just picked an agent that had like very good experience, like in investing real estate. So, and now similar to that agent, so just because I bought like more properties, so like all of the properties were financed with you. Thank you very much for that. So what I wanted to say, like I have that expertise when somebody is asking me like for how much I can rent this property, how much the remodel is gonna be of that property, right? So then we can kind of like calculate the ROI, and then I can come up with you and say, Nina, can you please help us like to figure out like on financial side, like on the loan, what's gonna be better, putting more down payment or maybe save on a down payment and then have
Absolutely.
higher monthly payment, but I save some money for the remodel. I can rent it out for more then. So
Absolutely,
this
yeah.
is basically like always like communication and finding the best deal for our clients, right? On financial side and on the property side, let's say that way. So that's what I wanted to mention, just we were speaking about. What do you think, like we just spoke about like buying high interest rate and lower interest rate. Do you think people should buy these days or they should wait a little bit before rates drop?
Definitely, I think they should buy it because they have much better option to find right property and negotiate price than wait until prices will go down and they have to compete for the same property with cash buyers, with buyers who are willing to pay a lot more just to get this property. So definitely do not wait. There are many different programs we can apply to reduce this monthly payment and high interest rate. There are 2-1 buy downs, there are 3-1 buy downs, there are all different programs, which Alex and I, we're going to have a series on all the programs, and we're going to be posting weekly, maybe bi-monthly, different
different
topics.
options that people
different
can
topics,
apply in whenever they want to buy something. So usually if you follow up our like videos in the future, so we'll keep you posted and updated with all the new programs that come up on the
Absolutely.
market, and then you can apply them and not just think that, oh, I have to probably save 25% for an investment property, which we have different programs coming in, right?
Yes.
And you don't have to wait 3 years to save those money, like 25% to buy
Not at all.
an investment
Not at
property,
all.
right?
And
It's similar with the
Yes.
primary residence.
Yes, and I gotta tell you that the main two holders of all mortgages in the country, which is Fannie Mae and Freddie Mac, they are adjusting programs and different options due to the market conditions. For example, there was never before you had to come up with your own down payment. Nobody could give you down payment, only like family members as a gift. Well, now the new program just came out in October. Then seller can give you down payment for your purchase.
Nice.
Not only 5%, not only, entire 20% if you negotiate the deal. So if you're using right experts like Alex and Rita, you can negotiate right deal and buy your property now.
Yep. Yeah, that's a very good point. And what I want to mention, probably it's a little bit early, about the property we're working for ourselves. So basically, I'm getting like pretty high rate, right? I don't want to mention, but it's a high rate. And I don't mind about that just because I get the right property for me and my family. So basically, I get it and I'm fine paying, that higher interest rate for a year maybe. And then I can just refinance it anytime, lower the amount of the principal interest, and then I'll just have like a less monthly payment. And at the same time, I can probably build up a little bit more cash, buying down a little bit more then. So basically, you can adjust whatever you needed. And when I'm buying my properties, I have two different ways. If I buy for investment, I look at the numbers and the property and location and all that stuff. Yeah, cash flow. If I buy for myself or my family, even like the property we're living right now, so basically I just need to fit my family needs. So basically, if I can afford that payment and it fits my family needs, so I don't mind about like the interest rate, because interest rate is something that will change all the time. I can refinance, I can pay it out, I can sell it, I can move forward later.
Yeah, and not only that that when you're buying right now, when prices are less and you can negotiate the price, you basically building instant equity.
Yep.
How? Well, because you're buying 100,000 less the property, which 2 years ago you would have paid 200,000 more. So in a year we will refinance you. At most of the time, if you are client which is coming back to us, it's a no cost refinance. So we will refinance you. You will pay only for the appraisal to verify the value of your property, as actually probably at this point even more.
Yes.
So higher is the value, more equity, better interest rate we get. So you build instant equity because within a year, when rates will start coming down, or two, prices will go up on all the properties. So you bought low, now you will be sitting with a good cushion of your equity in a house. So that's a way to go.
Yeah, another example I have, so like a couple of months ago we closed on a client together, and we got some credit back from the seller to buy down some points and to cover the closing costs. And at the same time, when appraisal came in, so they appraised the property like 50K more than the price, right? So basically they had built up equity like around 80K right away, like after deciding the document. So they had 80K in their like net worth, right? So this is another example that like may work if you know how to pick the property, negotiate, and some of that stuff,
absolutely.
Right? Yeah.
Yep. And there are many other ideas out there. I mean, like have you ever heard about an additional dwelling unit, or the other way, ADU? It's something which it's very popular. Why is it important? Why is it popular? Well, even Home Depot is on it. You can buy in a Home Depot the ADU kits are starting at 45,000. Why is it important? Well, if you have space on a lot, you get appropriate permits, and you put this little house. Now what happens? Well, somebody is paying your mortgage. You're renting the house either on a long term, or you're renting the house as an Airbnb, and there we go. You have not only increased equity in your property because you have another guest house, but you also somebody else paying your mortgage. So that is incredible opportunity, and almost all the city allowing now It's a new thing for 2023. So those guidelines for building permits change. So you got to check with your local authorities, local building area, and Alex can do this for you. And
Yep.
there's an option.
Yeah, another thing I want to mention, whenever you have this ADU, so what I like Momo Mortgage, like the platform we have, like when we log in, like to see all the
Yes.
numbers, there's a pretty good option that you can see if you pay, like $100 more on the mortgage, so how much you save in interest and how many years, right?
Yes.
Or if you pay, let's say, like a lump sum for 20K, so basically it's gonna show you that you save probably like 5 years from your interest, and then maybe like, I don't know, like a 20,000-30,000 in interest paying like over the loan period. So this is pretty good option that when you have this ADU, you can basically take all the money you make from ADU, just pay down your principal. You basically can pay your property in 20 years instead of.
Exactly.
Okay, thank you very much, Nina, for all this great information,
Oh,
and
you're
thank you
welcome.
for like being open, like telling people who you are and how you helped like 6,000 families, making their dream to become true. So this is like very powerful, and I think people will, like will reach out to you like for the expertise. And we will have all the information down below, so you can reach Nina at any time. If you want, you can tell your phone number at least, and
206, of course, local, 406-2522. Dial me anytime.
Thank you very much. Yeah, thank you very much for again for all the information, and I'm looking forward having other this type of recordings and bringing more value to our community.
Looking forward.
Thank you very
Thank
much.
you so
Have a nice
much,
day.
Alex. Thank you.
you.